Okay, Ohio gozaimasu, good morning, everybody here in the room. It's very, very good to see you, not in front of a Zoom box, but in the real people. But of course, you know, the people in virtual space, a very warm welcome and thank you for joining us. It's pretty straightforward what we're going to do because really it's Russell's show, right?
Because we've done no planning. Jesper.
Because we've done absolutely no planning. Yep. And so, look, the genesis, of course, of this session, Startup Nation Japan, is that, you know, if you do have 2 minutes with the Prime Minister of Japan, and he asks you, what can I do to make the country grow? You don't talk to him about monetary policy. You don't talk to him about fiscal policy. You talk to him about startups. Because, you know, if you grow the number of entrepreneurs by 1 percentage point of the population, your potential economic growth rate goes up by about 0.5%. It's just no question that entrepreneurship, risk takers who create jobs, who create new investment, that's ultimately where the only sustained economic growth is actually coming from. And from that perspective, you know, we wanted to highlight that indeed things are changing in Japan, that there is a new generation of entrepreneurs, that there is a new generation of venture capitalists, that an entirely new ecosystem is being built, and that yes, unfortunately, our good old dinosaur friends from the Keidanren are not really at the cutting edge anymore, that the new Japan is actually being built by a younger generation of risk takers. And so this is the third session. For the first session, we had a bunch of venture capitalists. For the second session, we had a bunch of activists trying to teach old dogs new tricks, so to speak. And today, I thought we end the year with a super success story.
Well, there you go.
Russell, you know, I'm so glad that you can join us here. Now, tell us a little bit. I don't think you're a stranger to the Asia Society, right?
I am not, no, yes.
Tell me a little bit about...
Yes, Jesper loves this story, and so I will share it. So I'm friends with James Kondo, obviously, who is very active in the Asia Society and International House. And he invited my wife and I to the Asia Society Gala in Hong Kong. And we were very excited, and my wife is very into fashion. So she wore a large, beautiful, sort of fashionable, whatever, high-level dress. I wore a tuxedo. And we arrived at the Asia Society to see everybody sort of in business dress or whatever. So I was very cautious today not to overdress for this morning. But Asia Society, obviously great society. You know, I personally was born in Singapore and grew up sort of equal split between Hong Kong, Singapore, and Canada. So I feel that I am the Asia Society incarnate. But yes, Asia Society experience was that people, you know, they weren't sure if I was dining or if I was a waiter who just had a different outfit than the other waiters. But regardless, the evening was still very interesting, although personally very trying. And that was my experience with Asia Society. So I'm happy to have a return visit under different circumstances. So thank you for the invitation.
Oh, so you're not the waiter?
I'm not today, although I will be serving coffee later, so no problem, depending on how this goes.
No, it's fantastic, and look, I'm really honored, you know, to have you on the stage here. And so, you know, let's dive right into it. Can you sort of tell a little bit, you know, sort of about your own background, and then how you came up with the idea of Paidy?
Yeah. So, and again, thank you everybody for coming this morning. I think we should do the housekeeping of the gratitude piece. But yeah, look, I think my story actually is based on similar observations to what you sort of highlighted, in that I started my career at Merrill Lynch in Hong Kong. Actually, you and I met 20 years ago. I remember, maybe you don't.
I had hair.
Yeah, well, there you go. And I didn't have a beard, so it's been shifting. So I started at Merrill Lynch, and then actually after graduate school, I started to work in Tokyo for Goldman Sachs and enjoyed that. But I also kind of had this observation that, incidence of entrepreneurship per unit of GDP in Japan was just so low in the context of an economy that was so big. So I was a trader on the credit and converts desk, Actually, Kathy and I met through this whole Eiffel and Takafuji debacle of the change in the money lending business law. And I was trading all those names, and basically it became sort of clear that basically financial services, and in particular consumer financial services, were going to change in Japan. And on my own little journey, I also kind of realized that I probably would want to make a stab at building my own organization. So it was this kind of confluence of timing where I was in Japan, I saw that there was going to be this gap in the market. The business that eventually became Paidy actually started as a peer-to-peer lending business. So in Japanese, we called it social lending, sosharu rendingu. But that was kind of the genesis to leave Goldman, was to go out and search after that opportunity. And kind of typical story, I mean, everyone is excited about Paidy now. I started the company 13 years ago. So I always joke it's this overnight success that only took a decade. In that time, we learned a lot. But in general, we were always very committed, number one, to sort of solving this problem in Japan for Japanese folks. Number two, really not quitting. I think that was a huge one, but equally not being overly fixated on solving, one implementation of what we were trying to do. So basically, our story is I left Goldman. I put together a small team. Actually, the first 4 people that we started with are all still with the company 13 years later. I think that also speaks to how different it is building a business in Japan. By the way, I kind of get that this is all over the place, but thematically, I think one thing that we should talk about is, there is this thing where it might be more difficult to recruit people to come and join a startup or a venture. And certainly that was maybe more the case, 10 or 15 years ago. But actually, all of the things that people get excited about high quality human capital, people that are loyal and trustworthy and hardworking and all of that, that's equally true for small enterprises as it is for large. So in our experience, it was great. We were able to basically start with this core team of folks who really, on paper, were not sort of co-founders, but sort of really influential early team members who sort of stuck with us through the whole thing.
And were they all your mates from Goldman's and Merrill's?
No. So this is the interesting difference, is that these really just rank and file employees. Now they've actually all done very well out of their longevity with us. So it sort of all worked out in the end, right? We did have a kind of a more Silicon Valley orientation around equity for team members and other stuff. So it all sort of worked. But I do want to say to everybody here, if you're thinking about starting a business in Japan and you think, oh, well, the narrative is, okay, Japan is hard, regulation, whatever, funding, blah, 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 employees, but actually there are all kinds of nice things out, the same sort of cultural things that you might think are impediments. Actually, I guess they have value, is sort of what I'm trying to say, in a very unsuccinct, not clear way. So my journey was basically, I left the firm to start this peer-to-peer lending business. Actually, we were the best at doing what we did, but the interesting lesson was it was never, ever going to be big enough to be exciting. We really liked lending money to young women. So this was basically, we ended up doing in-store financing in aesthetic salons, believe it or not. So if you wanted to go and do laser ablation or something like that and have a 2-year course of treatment, we would lend you sanjumaen on a little iPad in the thing. And so we looked at it, and we were doing a bunch of things. Like, this is the other point. Experimentation is obviously very important. So when we looked at it, the Nadeshko loans. Remember, this is when the Nadeshko folks were winning the World Cup. So it was women in their 20s paying it was 20-20-20. So women in their 20s paying nijumaen gurai, paying for like 20 times, right, on average. And the default rate was extremely low. And then we just went away as a team and said, okay, we've been doing this for a few years. We're very good at technology. We're very good at managing risk. We're licensed. We're happy with all of the other regulatory interface that we need to do. But I didn't leave Goldman to be the Hokuriku aesthetic salon king. So what are we going to do with all of these constituent parts? And we really discovered in Japan there's this unique aspect where even though everybody has credit cards, right, it's 3.2 cards per person, nearly half of e-commerce is still cash settled. So daibiki or kombini, all of these other different cash payment methods, furikomi. And if you look at who uses those cash payment methods, it's exactly our Nadeshko cohort that we really like. So COD or kombini maibarai, atobarai, doesn't matter. Like they tend to skew young, they tend to skew female. So we basically went away and said, okay, well actually there's really a unique problem that we can solve here, which is how can we give this group of people that we really think we understand better than, let's say, legacy financial institutions do, an experience that they're looking for that has everything that they want for why they're using COD, but then is basically as convenient as a much higher value-added service like a credit card. So as a team, we were very lucky. We had very visionary, truly visionary investors who said to us, okay, we understand the business that you've built, and you've demonstrated an ability to do regulatory interface, to manage a book of risk. I mean, I don't know, we'd done less than 100 million US, but we'd done tens of millions. So we sort of showed that, I mean, it was a business at some scale. It wasn't kind of a dream about our ability to manage a portfolio of risk. And they said, but actually we agree with you that the strategy is much better to not be in the unsecured lending business, but to go into the transaction facilitation sort of vision that you have. And so we were actually able to do kind of a Series A for the pivot, which is a little bit rare. So I think that's a credit to one of our early investors, Melissa Guzzi at Arbor Ventures, who, like us, kind of was looking at the landscape in Japan and saying, okay, here is a market gap. We'll finance you guys to go after that, even though you haven't proven that you can yet. So the thesis...
At that point, how many people were, how big was the team?
So we'd already sort of fired a bunch of folks. So I think, again, the journey is so long, it's almost hard to remember. But basically, when they financed it, I talk about that core 4 people. So we'd probably gone from 4 to maybe 25 and back to kind of like 5 or 6.
Right.
And that was also a good experience for me as a leader. Again, I think if you do all of those things with humanity and forthrightness and all these other good things, like nobody really resented that we needed to scale down. Like they had seen that everybody understood the metrics in the business and that we were going to go and do something different and that they should go and find something else to do. So I think, again, that's this other myth that it's hard to alter team sizes in Japan. I think in our experience, again, there are ways to do it, right? I mean, you don't want to have some acrimonious fight with people, but so we had scaled down. And I do want to explain the business, otherwise you'll wonder why it worked out as it did. But what we built with Paidy is basically very unique in a Japanese context. So you have to ask yourself, why is 45% of e-commerce cash settled in Japan? Basically, it's 3 things. One is a general perception of sort of security risk. People feel like, okay, a credit card might be exposing me to some kind of risk, so I'd rather do daibiki. 2 is a form factor. So obviously in Japan, most e-commerce has been mobile for ages. So we talk about, I always, right, like for ages and ages. So, this distinction between mobile commerce and e-commerce already has kind of disappeared, right? I sort of said, 8 years ago, at some point this distinction, when we talk about TVs, we don't talk about color TVs anymore because every TV is color, right? Like really this mobile commerce as a separate category will go away because most of the e-commerce will just be mobile anyway, right? So I think that's kind of played out. But given that you're shopping on that form factor, actually if you're a young woman on the Yamanote-sen going home after work, your card is in your wallet's in your purse, you're here like this. It's just like the form factor isn't easy. It's better to just do 2 clicks and you're done because you do daibiki. And security risk. And then the third one was basically people worry about overspending. So Mehdi's done a bunch of searches or research on this. We've done our own. And we sort of understand that actually because the credit card infrastructure is fairly old school in Japan, everyone has this experience. Actually, transactions can sort of flow through the network weeks later. So there is this perception that it is more responsible to pay in cash because you cannot double spend cash. And so, and the non-real-time nature of kind of the acquiring and settling side of the credit card business in Japan means that people worry about that risk. Okay, so what did we do? So we basically said, let's create an experience where it's 2 clicks and you're done at checkout, exactly the same as daibiki, but every moment thereafter, you have feature parity with a credit card. And that's what Paidy Atobarai is. So you do not sign up for Paidy. You can check out of hundreds of thousands of websites using just your email address and phone number. We instantly underwrite against that email address and phone number and what you're buying and where it's going. And like we have this huge machine learning effort to make this work. But to the consumer, it's magic. So literally in milliseconds, your email address and phone number is now a payment credential that works at Apple, at Amazon, at Q10, and Rakuma, not Ichiba, but Rakuma. And the value prop is very clear. You have a checkout experience that's exactly the same as Daibiki. You didn't have to enter anything that you didn't know, right? Everybody knows their phone number. Very few people know their credit card numbers. And a phone number, in some sense, is not a sort of a dangerous credential, right? But every moment thereafter, what we do is we basically consolidate all of your purchases on a calendar monthly basis. So you shop all January. We send you an SMS bill February 1st. You pay it February 10th at a Konbini or by Daibiki or not Daibiki, by Furikomi. Or you can do auto debit. And it just works every single month like that. So that's Paidy Atobarai. And then we have something that's kind of unique in Japan called Sankai Atobarai. So you can understand what that is. It's Atobarai 3 times. So you buy at Big Camera something for Rokuman. In January, you pay us Niman February 10th, Niman March 10th, Niman April 10th. There's never any interest. So my sort of partner, Sugie, used to run Lake. He's the shacho of Paidy now. Like a big part of our journey is we you know, in the Nadeshiko times, we were charging interest. We don't do that anymore. Like this is kind of a fundamental value proposition or like a corporate value, right? We're always and forever interest free. Like we feel really good about that. It's very helpful. Then you know, people are managing cash flow. You're not entering into a relationship that's sort of this unequal relationship between borrower and lender, right? We've tried to really deliver value and help do transaction facilitation without sort of being fixated on getting people into longer term stuff with interest. So that's what we did. And strategically, this made a ton of sense because every merchant has problems that they need to solve. So imagine you are a fashion website and half of your sales are on cash on delivery. Well, actually, you know, those sales don't happen all the time, right? So you might think, oh, okay, what's the difference between somebody buying on Paidy or somebody buying cash on delivery? I sell T-shirts as long as they check out. I'm happy. But it's not true, actually. And as you sort of dig deeper into the e-commerce ecosystem, you see why. Cash on delivery is not guaranteed. If the consumer is not home, first of all, it's an environmental disaster because the guy's got to drive around the block a bunch. If you fail to take that redelivery, it's delivered back to the merchant. So outbound delivery, return delivery, plus the Daibiki Tesurio that would have been paid by the consumer is all charged to the merchant. So that's problem number one. That's terrible, right? So you don't get 100% of revenue because there's this breakage in the payment method. 2, it's expensive when it breaks. 3, even if it succeeds, actually all of those cash payment methods are unidirectional. So if I buy some shoes from Adidas on cash on delivery and I decide in the next couple days, okay, the sizing isn't right or the color of some T-shirt is different on the internet than when it arrives at my home, the Daibiki guy does not come back to your home, give you back the cash that you gave him and take the sneakers. He's done. So for you as an e-commerce merchant, you have to get on the phone, or in fact, it's the other way. The consumer calls you, hi, they don't fit. You say, okay, understood. What's your bank account number? Okay, so now you have this massive information security thing, right? You want to sell T-shirts, but now you're actually in the business of storing financial data. Okay, here's your bank account number. Okay, thank you. Like, we will wait for the T-shirt to arrive, and then somebody will do a furikomi to pay you back. It's a nightmare, right? And it's not just Daibiki. Konbini barai, Ginko furikomi, all of them can't be reversed. So for us, when we go out and get merchants, you know, again, the biggest merchants you can get, like the conversation becomes very clear that actually the downstream impact of moving any consumer off of an existing payment method and onto Paidy is just super clear. Because now you can service them, we can do recurring billing, right? You can do subscriptions, et cetera, but also that because we have this feature parity with credit cards, from a merchant standpoint, we make cash consumers card lookalike, and basically the business has done very well. So I feel I'm killing the energy in the room, so I'll move swiftly along. But the punchline is, obviously, that business started to grow more and more. There was a very clear recognition from Afterpay and Klarna and some of these other folks globally that this paradigm makes a ton of sense, that you basically do merchant-funded, so zero interest, zero cost to consumers, merchant-funded installments and kind of, like type plans are kind of very much the future of e-commerce. And the punchline for us was, of course, that PayPal bought our business for 300 billion yen because we sort of were on this trajectory that we continue to be on to uniquely solve this problem for Japanese folks. And obviously, the size and scale of e-commerce in Japan will only just continue. Right? Penetration of e-commerce in retail is very low in Japan compared to elsewhere in the world. It's about 7% of retail. It's 20 plus in the US and the UK. So that's what we're doing.
Russell, so the initial pivot,
yes.
right, from the Nadeshko,
yes.
right,
yes.
To the buy now, pay later
yes.
model. Now the way you describe it, the arbitrage or the potential for disruption,
yes.
in retrospect, it all seems very obvious,
yes.
right? You the only guys doing this?
Yeah, the short answer is yes. So Atobarai as a service has been around for about 20 years. They tend to be paper-based. So to actually really do this vision of a persistent payment method. So not one invoice in one box that you pay 2 weeks later. Like people invented that 20 years ago in Japan, and it's very useful. People like that, right? So if you think about it, like Konbini Barai 1.0 is you order, you go and you pay the konbini in advance, and then the people ship it to you. 2.0 is, okay, you order, they ship it to you, and you pay the konbini 2 weeks later. Then for Paidy, which was this like 3.0, it was, okay, you shop 100 times at 100 websites, and then you go and pay us a month and a half later once. So that consolidation piece was huge. The persistence of Paidy was huge. And I mean, other people have started now, but they're kind of like, they're trying to ape a little bit of our feature set. So no, we were the first people, not globally, but we were the first people in Japan to really do the consolidation piece. And then because you have the consolidation and this monthly relationship with the consumer, then layering on the BNPL piece, it becomes very easy because the consumer is already in this monthly settlement kind of cadence with you.
Yeah.
So zero interest, like we don't even call it bunkatsu barai, right? With this sankai atobarai. We're the only people that do that. And I suspect that we're the only people that do that.
And for 30 seconds, so, great market niche, arbitrage opportunity,
yes.
you come in. A little bit about the nuts and bolts, your technology, right?
Okay.
I mean, it's obviously a big part of being able to do this at scale,
yes.
right? Where did you develop the technology?
So we built
how
it all.
How did you get the engineers? Talk to me a little bit about that.
So actually our company is fairly diverse. We have something like 35 nationalities on a team of less than 300. We actually have people Kathy may know this better, we have people sitting in something like 11 or 12 countries. Mm-hmm. So on the engineering side, for better or for worse, my co-founder Lee, we built, or he built the first team. We built in a language that was fairly cutting edge at the time that we started building, called Scala. There's not a huge amount of Scala talent in Japan. So we've tended to have more people in Eastern Europe and elsewhere, but we do have an engineering team here. But we've also, we've been very lucky in that we actually can get very talented people who want to be in Japan actually becomes part of our attraction for those folks. So we can say, okay, well, you're at Google in Argentina, or you work for Facebook in XYZ. Have you ever thought about how neat it would be, Mikitani-san does this too, I'm sure. Have you ever thought about how neat it would be to come and do great work with great people and have all of these amazing ancillary benefits of how great it is to live and work and be a part of Japanese society. So on the engineering side, we built it all ourselves. It's all quite a unique approach.
Yep.
And we have a very diverse team, which has been advantageous for us. Even at the management level, we have a very diverse team. So Go ahead.
Can you shadow one of the myths here? It's like, oh my God, it's so difficult to get foreign workers to come to Japan. So visa problems?
Yeah, no, very easy. I mean, I think
Very easy.
Very easy. I think it depends on scale. It's like anything. If you get good at it, then you're good at it. I know that's kind of a tautology, so sorry, but like if you have, as you do it more and more, it becomes easier to do. So if you work with the right consultants or, whatever. But yeah, no, it hasn't been hard for us at all. Now, I think if you were doing something else, I mean, like if you needed whatever people to do, I mean, let's acknowledge that we're hiring highly skilled people under a highly skilled, so it's like that probably helps it, but it's not hard to do. I don't think it's hard to do.
Right. And then, sort of just while we're at the myth busting end of the conversation, licenses, rules and regulation,
Yes.
your experience of
Yes.
dealing with the regulators.
Yes.
Did you have to have a separate team that dealt with it? How did that work
Yeah, it's
out?
a great question. I like regulation. I like it. I think that basically, as long as goalposts are not moved, like on the one hand, when you're starting, it seems mendokusai, because maybe you have to wait a year. So like for us, when we got started, actually, had I known that, I might have stayed at Goldman an extra year, FYI. But everything that's an impediment in front of you, once you've surmounted it, is now something that's kind of protecting you from the rear, right? So look, I think that the regulatory regime here is consistent. Everything has its own kind of like peculiarities, but I think at the very least the laws on the books are pretty clear and not that changing. There's more creative people than you might think in the legal profession, in my experience, that have been good at finding, what are the right contortions of terms and conditions or whatever. Like we always start from consumer experience, and then everything else is dictated from consumer experience. I don't care what the legal model is, as long as it's legal, and it's serving this goal for what we want the consumer experience to be. So I would also say to the other folks in the room, like if you can find a creative lawyer early, it's huge. It's huge. So that was very, very advantageous for us. But yeah, no, I think those myths. And then availability of capital. So we raised, I think, $385 million US, something, again, Kathy may know better. So, and really the experience was sort of back and forth between domestic in Japan and international. And actually, we were very lucky. Like again, as you say, in retrospect, it all seems clear. It wasn't. But we have almost this perfect cadence between onshore, offshore, onshore, offshore, onshore, offshore, in terms of financing rounds. And it was very lucky for us because basically, if you think about when you're going and funding a business, you kind of interact with a set of investors, then you see them again 6 or 12 months later and they've sort of seen the progress, or you want to have progress between rounds, right? So in some sense for us, we split it into these two parallel processes where the domestic guys would see progress from here to here, and then the international folks from here to here, and as it started to really coalesce, it was much, much easier to do, but there is money everywhere.
And did you, when you started out with the Nadeshko project,
yes.
right? Was the initial team of investors, right?
Yes.
Were they predominantly domestic or also a hybrid?
Yeah, it's a great question. So again, a little bit of a hybrid, and we also took some money. So like we've taken money from a lot of folks. So we were a huge investment from Itochu in the fullness of time. So
at the start.
No, that was later. So the early guys was basically we had Cyber Agent Ventures, Recruit Strategic Partners, 500 startups, and then like friends and family and some others. But so really this transition from kind of this like super angel stuff or like small CVC. And again, don't forget, this is a long time ago now. So I think all these guys are writing much bigger checks. Congratulations, go get a bigger check, all of you. So it was this kind of mix. But really, Arbor Ventures was huge for us. So Arbor led the Series A, and then we had SIGs. So Susquehanna came in an expansion. Then Series B was basically Fidelity and SBI, so onshore in Japan.
Right.
Series C was Visa, Goldman, and Itochu. So we did only strategics for Series C on purpose. And Itochu had put in a small check in the Series B. And then we did a Series C expansion that was PayPal, Tyborn, some other folks, Soros,
Yep.
and Itochu again. And then Series D was Soros, Tyborn, and Wellington.
Right.
And in total, it's about $380. Right. So, so at the end, as we got more institutional, then it was kind of this sort of institutional all mixed all together. But the strategic thing also makes a ton of sense. I think the relationship with Itochu was very, very important for us. They had a huge amount of faith in what we were doing. So I think that's something that's maybe a little bit different in a Japanese context. But of course, everyone's mileage will vary. It depends, like who is the deal leader, what is the internal support, all of that other stuff. But yeah.
And then in terms of, I mean, were you doing? Did you know that? Did you want to get bought out? Did you want to go IPO? What was?
Yeah,
what
that's
was
a great question.
What was the strategy there?
So we
after 13 years.
After 13, yeah. So at some point you have to mature and graduate. That's for sure. In our business, we run a balance sheet business, right, as you would imagine. So even though the settlement is fairly quick, we do have to carry risk for a certain period of time. This was another huge advantage of being in Japan. So even as a startup, I won't tell you how cheap, but we have a fairly efficient and low-cost balance sheet, even from earlier in the day. Now, a big part of that is team and track record and everything else. But at some point, it just became clear that if you wanted to have an even bigger balance sheet of bank lines and credit facilities, that being public would be helpful, or just in having more equity, right? Like a big part of why we raised as much money as we did wasn't that we needed, like you've never heard of Paidy, right? Like you didn't, whatever, you're not our target folks. You may have encountered it at Amazon or Apple or something, but like you didn't see it on the, like our customer acquisition was merchant-led. So we didn't have to spend money on acquiring customers, right? That's a big part of why people like the business and the business model. But what we needed was money as infrastructure in the same way that you need servers, right? The more servers to just run higher volume. We just needed more cash against basically credit lines to run a larger and larger business, right? So if you think about Paidy as a closed loop, right? In the open loop world, you have issuers, acquirers, and schemes. That's basically how the credit card world works, right? So you have your bank that issued you the card. There's the acquirer that works with the merchant. There's the scheme that runs the transaction to make sure everybody gets paid. Paidy, that's all in one company. So basically, our technology needs to be as good as Visa or MasterCard. The Paidy network cannot go down. That's like the cardinal sin of payments. It can't go down. So that's a tough problem. We're an issuer, so we have to take credit risk against consumers, underwrite them, service them, give them great customer service, right? So we want to be as good as Credit Saison or American Express, something like that. But then the third one, which is tricky, is we also act as our own acquirer, right? We face the merchants and pay the merchants while we're waiting to collect from consumers. And what does acquirers need? You need a big bulletproof balance sheet. So that's why.
Yeah. So for 30 seconds, I mean, you always, customer experience first,
always.
Right? But at the business end of things, you've got to convince the merchants, right, to come on board, right?
Yes.
Talk to me a little bit about that, because I mean it's a closed market, right? I mean you can explain the rationale, right, for why it's in my advantage to do it, but you're the first merchants that you onboarded, right? What were the success stories, and what was the pushback that you got?
So first merchant, we were very strong in fashion and apparel, for exactly the reasons that you would imagine. It's skewed, like if you were selling fashion and apparel on a mobile phone in Japan, you were selling to young women. And so that's where we were able to, and if you were doing that, then you were selling a lot on COD. So our early wins were basically, actually the first publicly listed company that we had, and I won't say the name, but the first one that we got, I remember it was the day that I proposed to my wife, and I signed the contract in a logistics center in Kanagawa, and I had to rush from the logistics center to get back to go to the dinner and arrange the flowers and all this stuff to propose. But the reason it was in the logistics center is it wasn't the management of e-commerce that wanted this solution. And it wasn't the marketing team. It was literally the people in the logistics center saying, we're selling all these T-shirts, but they're coming back because people aren't home for Daibiki, or the T-shirts are the wrong size, and we're now filling a room with people that are doing Furikomi, like, can we work with Russell instead? And so, you can sell this business in a bunch of different ways. Like, you're just solving problems, right? Again, all the entrepreneurs here, all we do is problem solve. That's it. So I can problem solve for logistics people. I can problem solve for marketers. Paidy is a great way. We always, turn browsers into shoppers because it's easy, right? You're not asking somebody to share sensitive information with you, right? Even huge websites. The #1 payment method for first purchases will be Daibiki because the consumer is not sure that they're going to transact with you more than once. So the low-risk way of starting that relationship is, okay, let's see, or if you're an offshore website, they're not sure that the shipping is going to come. Daibiki feels low risk. Okay, if you're selling fake goods or it's a fake website and you never send it, well, I'm not at risk because I won't pay you. So, and the other one is just general management. So you can pitch it and problem solve them for different people in different ways.
So not to be picky, but the warehouse in Kanagawa, was that a Japanese company or multinational?
It's a Japanese company.
A Japanese company.
Japanese company.
Right. Okay.
So this is the other point for us. Like the diversity in our team, which, let's be honest, was kind of forced. I don't think we could have been a monoculture with a founder that looks like this. So a very diverse team, but it helped us a lot because we could interact in different ways with different folks, but always with this problem-solving mindset. And I've really emphasized it. Like, we learned from the peer-to-peer lending days that you had to have a differentiated consumer experience to win. Our loans were cheaper, but the experience of getting them was no different than going to Eiffel or Takafuji or anybody else. So we kind of went away and said, okay, we really have to invent this new experience that's magic. Checking out with your email address and phone number is magic, right? So the point that I want to make is like I can't even remember the point I want to make. Oh yeah, so our biggest customers are obviously the biggest companies that are there, right? It's Amazon, Apple, PayPal, who now owns us. Our ability to go and be able to problem solve for those guys and interact with them was obviously, because we have such a diverse team, that's very helpful. But then equally, we have this very strong relationship with like Japan Inc., right? We were an Itochu equity method affiliate, right? So I think that, like, not by design, but we've been able to interact in different ways with different constituencies. And I always push the team. Like, we have these internal kind of mantras, right? We always talk about attack mendokusai. Attack mendokusai. Not solve mendokusai. Attack. Wrestle it to the ground. Kill it dead. And everybody has mendokusai. You have mendokusai as a consumer. You have a mendokusai as a logistics person. You have mendokusai as an e-commerce manager. So, which is why, actually, by the way, we're still super excited to keep building this business under the platform of PayPal, because there's still a ton of mendokusai to keep attacking. So, yeah.
Russell, just very, very quickly, the focus was always Japan.
Yeah.
Or did you ever want to go into Malaysia?
That's a great question. That's a great question. So the punchline is, we always wanted to start in Japan. And the rationale was clear from the very beginning why you want to start in Japan. One, incidence of entrepreneurship per GDP very low, so it was unlikely. So when I lived in California, it felt like every good idea had 10 well-funded teams. I feel like in Japan, it's only 1 out of 10 good ideas has anyone even trying, so that's pretty helpful. And basically, when you look at it, the market is so big, it makes a ton of sense to start here. And the advantage of basically well-developed capital markets and like I talked before about how money and balance sheet is a piece of infrastructure for us. We really felt that basically, if you started in Japan and you had access to onshore financing and you could build a big kind of business in Japan, it made more sense to start from Japan and have a big, large, low-cost Japanese balance sheet and go into Malaysia or go into wherever than the reverse, right? Like, I have other friends that have similar businesses that were like portfolio sisters with them, or sister companies, and their cost of capital is in the teens, right? And so for them to sort of do what they need to do in Southeast Asia and elsewhere, it has to be a very, very different approach. And it always felt to us that actually if you have, this global competitive advantage, everyone gets all sad about zero interest rate environment in Japan, but actually if you're a consumer of balance sheet, it's not a bad environment. So we always thought about it that way. But we never, again, we had this other mantra, which was win at home. Win at home.
And home was always Japan.
Always Japan.
Right.
Always Japan, yeah.
Right. Russell, in Japan, I think that you really stand out, right, in so many different ways. The diversity aspect is obviously, one big one. The other one is that you got acquired. In the US, if I'm halfway correct, more than 80, 85, 90% of all the exits are actually acquisitions, right? With established companies growing through M&A and integrating the startups into their business. Here in Japan, that's basically, it's almost unheard of, right? So how did that come about?
It's a great question. So it was not necessarily, so our emphasis has always been on building as strong and robust a business as you. It sounds so trite, but it's totally true. That basically, a good business will, options will present themselves. So we weren't optimizing for one or the other. We obviously were preparing to go public. It's such a long lead item. It's important to do, our long lead time. I think for us, maybe the diversity of the team and our unique approach to the business made it more interesting from an acquisition standpoint. I also think, by the way, thematically, the world is waking up. One of the other things we talk about internally at our company is Japan matters. And actually, there are, I think, international acquirers and other folks who are looking to plug gaps in their offering or accelerate what they're trying to do in Japan that are probably looking at Japanese assets more. So maybe this will kind of be the beginning. I think there is another myth to the point where you say people say, it's hard to do in Japan. There's a myth that it's hard to do deals in Japan. And maybe we're disproving that myth a little bit and you'll see more deals after this. I'm not sure, but it's possible. So we pursued both. I think it's important to pursue both. That creates a little bit of competitive pressure on both processes. But I know that the cliche in Japan is that every shacho, first of all, every founder remains the shacho. I'm not a shacho, I'm a kaicho. I recommend it. But also that they become obsessed with going public, and they go public too early, probably. So I think all of that will evolve over time because the market will just mature. There'll be more late-stage capital. I know a great ESG-focused growth fund. So yeah. Anyway, sorry.
No, it's interesting. Obviously, the marriage with PayPal makes perfect sense. You get the global piece, or you get the US piece. There's tons of synergies that you can come up with. One question: why didn't one of the great Japanese financial institutions buy you?
That's a great question. I'm not sure. It would be unfair for me to speak on their behalf.
Right.
But I think that, look, our fit, well, I think, I don't know, very hard to say.
The point I always try to make is you look at Japanese conglomerates and they all sit there and say, oh my God, we have nowhere to invest. Right? There's no opportunities to invest in, and all they do is accumulate cash. And you say, well, okay, here's a highly profitable disruptor in the financial services industry that's not about a concept, that's actually very real, and it's far from doing, it's only at the beginning of the hockey stick of scaling, dear mega bank X. How about it?
Well, so look, yes and no. I don't know. Look, I think that the marriage with PayPal is a very good one. So that made that very, very compelling for our investors and for our team. We felt it was a really, spiritually the perfect home for what we want to keep doing. We did have UFJ and SMBC and Shinsei and Aozora, and obviously Itochu to a huge extent, we're all shareholders in Paidy. And I think for us, that was great. We had that facilitated relationships and all this other stuff, but it wasn't clear, even when you're selling an app, when you're the I would flip it around, Jesper, at least in the specifics of our thing, which was those wouldn't have been as good a home for the asset or the business or the team.
Right.
So I think even if they were there, and there were some different opportunities along the way, I think that it would have been very hard for the team to have been as excited about what that would mean for the business going forward with some of those folks. And no offense to them, but I think it's just, to your point, it's not as complementary as having global acceptance and you know, the sort of the domain expertise that PayPal now has brought to bear for us.
Right. Fantastic. Let's open the floor for any of the questions there. Please, you know, anybody. Sir. If you can quickly say, you know, who you are, and please keep your question to 30 seconds or less. We apply German rules. If you go over 30 seconds, a bottle of champagne for everybody.
There you go. Okay, bye everyone. So anyway, my name is Jiro. I'm a country manager for Web Summit in Japan. So the Web Summit is one of the largest technology events in Europe. Then actually the TMG and Medi are planning to bring them to Japan next year or 2 years later. But the Tokyo, in terms of the startup, a little bit not visible in the global field. So if you have any advice to TMG and Medi that to change their route or to bring them entrepreneur who never come to Japan, who don't know any about Japanese culture. So maybe in 30 minutes.
I think things are getting. So I know Paidy pretty well. So I go to founders a lot. Actually, so Web Summit is run by a guy named Paidy Cosgrove. Anyway, so I do think that there is more and more awareness. I mean, obviously, COVID has interrupted the trajectory of all of these things, but I do think that we're starting to have more events and all that other stuff, which is good. I'm not sure what the huge advantage for Japan is, other than maybe you can help people understand and collaborate or whatever. But I would say, in general, compared to when I left Goldman in 2008 to start on my journey, I think there's definitely more. There's more money. There's more focus. There's more visibility about you know, working at a startup. And obviously, it's not us. I mean, it's the success of Mercari. Who else? Anyway, there's a bunch of folks along the way that I think are redefining how people think about where to work and why. But yeah, look, I think once this COVID thing sort of settles, then I do think everybody loves Japan. Like, that's the thing. Do bear in mind, everybody loves Japan. So at some point, again, you'll get to the point where you'll have all of these kind of global luminary folks will come to your conference, I hope, because they want to enjoy Japan in addition to enjoying the conference, I suspect. So let's see.
I think at the end of the day, and you know, for 30 seconds, right? You know.
Or there's champagne. We're counting.
I know, but I do the German champagne bit, which you don't want. You know, nothing succeeds like success, right? The more success stories you have, and I mean, look at another example. I mean, look at Finland. You know, look at even, you know, little France, which 5 years ago was a nobody in the startup scene, and now is, you know, the biggest startup producer, you know, in Europe, simply because of you know, featuring and creating, you know, some incentives for doing that, right? And I think that, you know, your type of story, right? You know, is exactly the right one, because if you go the IPO route, right? Ironically, you sort of find, you know, the founders, whatever, people cash out, but then there's very little in the majority of companies that happens afterwards, right? You know, while, you know, here, this is going to be not just a going concern, but a growing concern, right?
Yeah, thanks.
Johnny, you had a question.
With your no interest scheme, do you see opportunities in the Arab world with Sharia lending laws?
Yeah, so there are folks. So I invested in a company that does something similar in the UAE and Saudi Arabia. So yeah, the punchline is, like, leaving aside the Sharia thing. Like, I just think it's very compelling and powerful. Like, if you can do merchant funded. You know, we have a great practice with Apple. You can go to the Apple store in Japan. You'll see the Paidy logo on every table. You can get 24 months interest-free on an iPhone or a Mac. You know, people do understand how compelling that is for folks. yeah, like we love that. Like, not that interest is bad. Like, obviously things do cost money. Like, again, you can make spaghetti at home, or you can go to a restaurant, and it's obviously a different price. It's still noodles. But like, I think we like this idea of basically facilitating transactions. Our corporate branding, like our internal thing, is room to dream. So we like that. Like, people can wake up in the morning and be excited that we're facilitating people enjoying, a kind of a different experience in their life. So yeah, so Shariah plus minus, but basically for us, this idea that facilitating room to dream for people really resonates with us as a management team and us as a company.
Thank you.
Kimura-san.
Thank you, Jesper. Thank you for your great presentation. And I'm Shige Kimura, Executive Advisor of Japan Post Investment Corporation. And I used to be a government official at the Ministry of Finance. And maybe my question is related to my background. So you said about the Japanese regulators that they are consistent and they don't move the goalposts, which is
not
great.
about licensing. Enforcement sometimes is a little bit, but anyway.
Then my question is more about it, because in some cases, my perception is that they do move the goalpost. Yeah. One good example is consumer finance, and about the so-called gray zone interest rate, and they suddenly moved, and even the Supreme Court moved the goalpost and made the contract invalid. So in your case, and you are in the neighborhood of the consumer finance, and depending on your business model, the regulators could have been more kind of sensitive to the consumer protection. So, for example, if you had charged a higher fee on the consumer side, maybe the attitude could have been different. So my question is, what was your secret of your success, being having a very good relationship with the regulators?
No, I think, look, I think our regulatory interface was not in any way special or atypical. So we have a Kashingo Menkyo, we have actually a Type 2 Dainishu Toriki Zandaka something, and then we have the Hokatsu from METI, the Hokatsu license. So no, I don't think I think we just build experiences that make a lot of sense. The gray zone thing is kind of, I agree, historically was a big deal. But I think in your question, you've hit on your own answer, which is, I do think the focus is more around consumer protection. And we also share that philosophy. So obviously there's no interest, so that's a pretty nice feature. And our experience, touch wood, has been very straightforward. We're licensed, we interact, we comply with everything that we need to comply with. And I think we have a good communication. And which is a little different, I think. This is where I do want to make a distinction. Like, I think our experience is very typical in Japan, and that's fine. I think our approach is maybe a little different because we are Japanese compared to some of the folks in Western Europe or elsewhere who might want to challenge and say, oh, well, no, like, I don't want to be regulated, I'm going to do this thing, or, rather than doing contortions in legal model, I mean, contortion is the wrong word, rather than adapting legal model to be compliant, to support a consumer experience. Sometimes the more kind of whatever, the Uber-esque approach to things is to say, well, this is the consumer experience we want. Regulation be damned, and ask for forgiveness, not for permission. We've tried to strike a kind of a different approach to that, which is get licensed. At the very least, if you're licensed, you have all of the kind of guidance around that licensing. And then how you use that licensing to create consumer experience is up to you. But I would always rather do that than create consumer experience, have no licensing, and then have somebody come and knock on the door and say, well, we think this looks like Kashingo, or we think this looks like pawnbroker. We think this, no, that life is too short for that. I think don't be afraid of being licensed. Don't be afraid of being regulated. In our experience, it's the right way to go.
Great. Very quickly, let me go to the world of cyber. Sawako, I think there's a couple of questions there.
Oh, nice.
Sure. Russell, thank you again for joining us this morning. We actually have somebody online with the same last name as you.
Oh my goodness. Hello, Dad.
Your father is watching.
I think it's my dad. It's not a common last name, guys. Let's be honest.
Right. Great. Okay, so we have a question from one of our founding members from Washington, D.C., Glenn Fukushima. And he asks, what are the top 3 lessons you derived from your experience that you'd like to impart with other entrepreneurs?
Yeah, that's a great question. So basically, surrounding yourself with people that have the best interest of the business at heart is really key, actually. And only in retrospect do I see, like, again, Melissa from Arbor, like, if I look back at all of the times where there may have been some kind of, not even friction, but like just big disagreement about strategic choices or whatever, 100% of those times when I look back, I can see, even if we didn't agree, like both she and I were operating from a place of the best interest of the business at heart, even if there was a disagreement. So I think that was huge. 2, it's kind of similar, but it's also team. Like, I think team is massive, and having the right team around to you know, who can challenge each other, but like, and you'll find this in your journey, all the entrepreneurs here, like, you're going to get access to better and better talent, right? And sometimes you're going to be tempted and get the wrong people. So for me, I feel like hiring is 50-50. So also, don't be too hard on yourself if you know that you get some guy from Google and he's just super disappointing, or some senior person decides to join you, but they're just like, you know, play acting. They're playing startup. They didn't really want to do it, you know. So I think team is super important. And then the third one, I guess, and it's related to the first 2. Look, this sounds like I'm giving myself too much credit, but in retrospect, I'm so happy that I graduated from being the Shacho to being the Kaicho. Like, in an American context, I'm kind of co-CEO. Like, I run the business, and Kathy, who is a board member, will know this. You know, we run the business really as partners, my CEO and I. But it's just humongously advantageous because there are things that he can do in his role that I could never do. And I'm just so pleased to have him there. Whereas if I were obsessed with, oh, I'm the founder, I have to be the CEO forever, and somebody else can be COO, he would have been less effective. I would have been less effective. The company would have been less successful. So back to it's the first 2 lessons combined, right? People who have the best interest of the company at heart, and sometimes for you yourself, it should be clear that the best interest is maybe something that is like less, although I didn't feel diminished by this at all, but like some change even in your own role and title, if it makes the most sense for the business, it makes sense to do. But predicated on the fact that you have somebody that is really talented, is really committed, is going to really succeed in that role in a way that you couldn't. I think those are, I mean, that off the top of my head, that's about it. And it never hurts to be lucky. Always better to be lucky than good, and have some perspective about how many little serendipitous and sort of lucky breaks there were along the way.
Can I have a follow-on to that? You know, sort of in your discussions and your meetings with sort of other, you know, startup founders who've been successful in the US or in Europe, elsewhere, is there anything that you take away that is sort of specific to Japan?
Yeah, that's a great question.
I mean, maybe there isn't, but, you know.
Yeah, that's the thing. I think sometimes we want to fetishize why things should be different. But actually, I think these things are very consistent. And, you know, one of the things, so actually, I'll do another plug for Riku. There's a great book by Blumberg called The Startup CEO. And actually, the way Riku and I kind of built the business was sort of following this book together. And Riku actually wrote the Japanese version of this book. So he liked it so much, he translated it, and he's now published it. So everybody should go and buy it. But look, there are things that are different. But as Jeff Bezos says, right, people are always obsessed about what's going to change. Amazon is obsessed about what's going to be the same. So Bezos famously says, people are always going to want lower pricing. People are always going to want faster shipping, right? So I would say in a kind of analogous framing, like there will be differences, but most of it is going to be the same, right? You're a founder. You need to be the custodian of the vision. You need to never run out of money, and you need to build the team. There's only 3 things you need to do. Now, they're all hard. It's only 3, I think mostly it's the same, believe it or not, which is great. That bodes really well for Japan, right? Like, we can build a much more robust ecosystem here, should we care to. And you do it by kind of this encouraging this bottom-up, unleashing of creativity and willingness and all this stuff. And I'm sure that Japan is better and better for this, and I'm sure it will continue in that regard too.
Jordan.
Thank you. So I also run a startup in Japan. My name is Jordan, or in Zechtemo, and we've been also on a fundraising journey through our Series B, and so a dice imp, I can learn a lot and
sure.
appreciate a lot of things you said today.
I charge by the hour.
Yeah. Kind of curious, you mentioned that PayPal came in from your Series C, I believe,
Yep.
And you mentioned kind of keeping all your options open in terms of liquidity in the future.
Sure.
How soon did you start having those conversations? What did that was that kind of the intention from the beginning in terms of them joining, or just some insight? Thank you.
Yeah. So there's blog posts that will answer this better than I will, but there is this idea that they say, well, you should never take money from somebody who might be an acquirer. I'm not sure I believe that. I think the advice that gets given in Silicon Valley is you don't want to do that, because as soon as you stumble, then this person will buy you on the cheap through your stumble, right? They won't support, if they were just a financial investor, they might come in and do a down round, and then right? But if they're a strategic, then they might take advantage. But I think for our experience, it was a great opportunity. I think PayPal's very thoughtful about how they make investments. I don't think they invested with a view to doing M&A, right? I think that if you look at what PayPal Ventures does, it's basically folks where, it makes sense to have some equity involvement, if there's a commercial thing or not. Ours ended up being kind of all three, right? They were venture invested. Then we had this commercial alliance, which made a ton of sense. And then it sort of ultimately came to the conclusion around the M&A piece. So I think as a founder, you have to always be kind of creating options. But the best way to create options is just build a great business, right? And so we were not adverse to having PayPal as a shareholder. They're very smart people who work there. They're very thoughtful about giving resources to their portfolio companies. So that just made a ton of sense for us to do. And we were not put off by having visibility to them. Now, that it may be different. There may be other people who might want to invest in your business that you may not want to have visibility to, but we weren't put off by that. And then I think to answer the other question, look, again, we did do a dual track process. We were working very hard on going public. And I think that you'll end up seeing that happen more and more in Japan. And I think that that's the right time, right? Basically, M&A happens usually if you're doing some other financing. And in our case, it was in the context of exploring going public in Japan.
Great. Dan.
Thank you. I'm Dan Fuji. It was a great talk, and I learned quite a bit. My question, I guess, is a little bit related to the last question. Is PayPal in Japan? I've been watching it for years. Has actually not gotten traction in this country, and sort of had a number of failures, I would say. And when you sold to PayPal and worked with them, do you have some concerns about this history of failure in Japan and their ability maybe to impede your ability to grow?
No, I think they've been that's a great question.
And I'm sorry. And then with PayPal, what are new businesses that you think you can expand into, or resources that they provide you that you didn't have yourself? And I did a video call with Dan Schulman about 2 weeks ago. He's fantastic.
Yeah, Dan is. I love Dan.
And I think
Dan is a super
working
nice guy.
with him is probably maybe more exciting than working for PayPal. So anyway, I'd like to hear your thoughts on that. Thank you.
Okay. Well, shout out to Dan. First of all, I have to do that. That's required. So look, I think PayPal are very smart. Actually, I'm supposed to say that, but they are, in that they acknowledge exactly what you've highlighted, right? Their history, the scale of their business here is probably bigger than you think, but it's more about cross-border acceptance, right? So that if you're a Japanese person and you want to shop on an American or European website, very likely you have a relationship with PayPal. So that's a great business. the in-border business for PayPal has been less robust. And I think that that's where there's this complementary setup between now us as part of PayPal Group. They've also been very smart about not messing with the mojo, as they like to say, of us and as a team. So I'm still the chairman of Paidy KK. It's still a company. I just have one shareholder instead of many. We still have all the business relationships that we do. We still have all of the strategic and product planning that we want to do. So that hasn't been impeded, which I think is good. I think it's only accelerated by access to resources, be they human capital or financial capital or whatever. And for us, this is really what kind of excites us, is really the pitch was continue to be you, dream bigger, because now you don't need to worry about quarterly visibility as a public company. There's much more that you can do. And then jointly, what can we leverage with PayPal's global scale of hundreds of millions of account holders and build together? So like all of that calculus went into why that we went down the path that we did. I do think PayPal has big ambitions in Japan. I think we will, as a group, do more and more in this market. And it makes a ton of sense why. It's still big, right? I mean, even to this point about Japan matters. For PayPal, Japan matters too, right? So we're going to work very hard to develop not only the cross-border piece, but really domestically building on the strength of Paidy and some of the other stuff that we can do together. And we will do other new things. Like you will see more. I think that they're both from a product innovation standpoint and maybe some other, like, you know, in the fullness of time, deeper merchant services, deeper consumer services. You know, there's some of the other stuff that PayPal does globally that's quite interesting that we think that we can do some of in Japan too. So, so we as a team are super excited, and actually we as a team are kind of leading that charge in Japan for PayPal Group, and that's why we were so excited about the deal.
Let's do one more question from the virtual world.
Sure. We have a question from Donna Nairi, and her question is, if you were to start a business today in Japan, which market or industry would you focus on?
Yeah, so I'm kind of, I do like crypto. I think there's a lot to do there. So I'm sort of doing my own little dabble. And I'm also fascinated a little bit by, although I have no expertise, I think insurtech is interesting, and I think real estate tech is interesting. I had a very nice lunch yesterday with somebody that's gotten me thinking deeply about real estate tech in Japan. But I think it speaks to the point that, again, it's a big market. There are lots of opportunities, and there aren't that many people chasing those opportunities. And I think that many, many other businesses will be built. And you know, it's a blessing and a curse in that Japan is big enough that you can build a domestic-only business. You know, Paidy, zero offshore revenue, zero, not a single yen, right? But basically big enough to have an outcome that makes a ton of sense for investors, for team members, for founders, right? And I think that there'll be more and more built. So I think those areas, at least for me, are something that I think will be neat. I think there will be very cool businesses built over the next 10 years in crypto, in insurtech, and other stuff in Japan, for sure.
Very good. I think we've come to the end of the line here. Thank you so much, Russell, for having us.
Yes, thank you, guys.
I'm glad you didn't come in the tuxedo.
Right.
But you know, for you, we'll be glad to throw a little gala event.
Well, that's very kind of you.
If your wife needs to show off her latest dress.
Well, thank you. That's very kind. Well, thanks. I hope it was you. I mean, free form. Again, we didn't plan, but it is what it is. Thank you, everybody, for the time.
Thank you very, very much.